emerging markets in general. Guy, afternoon. Thanks for joining us. The consensus view is that the FOMC may have a dovish tone later today and not move on the policy up until March. Is that your view as well?
Well, I think that probably makes a lot of sense. I mean, I think the most interesting thing that we're going to get out of the meeting today is some reflection from the FOMC on how they balance the domestic situation within the U.S., which continues to be relatively robust, with the situation globally and in financial markets, which has been anything but robust since the beginning of this year. So we've seen financial markets generally in a very tricky place over January. It's been a very difficult month. And the news coming out of China, or the people's perception about the news coming out of China, has generally been fairly poor. So we'll see whether the FOMC commentary focuses on what's happening in the rest of the world, or whether they take more of a focus on what's happening domestically in the U.S.
Hi, Guy. Afternoon. Currently, the dot plot suggests that there will be 4 hikes in 2016. So given the global turmoil, do you think in today's meeting they will make any changes to the dot plot? Should we expect perhaps fewer hikes in 2016?
Well, our own economist's view is that we could get 3 hikes over the course of this year in 2016, which is actually above the consensus of the market. So if you look at what financial markets are anticipating at the moment, it's somewhere between sort of 1 and 2. So financial markets are certainly, in terms of just the U.S. domestic markets, a lot more hesitant and a lot more believe that monetary conditions remain a lot more dovish than the dot plots do. So probably we could see some shift to the downside. But again, that'll be one of the interesting questions that people focus on today.
But will it be enough to, if there is a change, a downward change in the number of rate hikes, can it spur an equity rally, or is it priced in?
Well, I think that it clearly, again, as I mentioned, I think clearly financial markets are a lot more dovish than what the Fed has been talking about or what the Fed has been sort of steering people towards. Now, the consensus view, I think what the market's anticipating is a fairly soft commentary. I guess there's maybe more of a potential for surprise of something not being soft, and for the FOMC really focusing on what's going on in terms of the domestic market. That's not our view. It seems relatively unlikely. But I think that the view that the FOMC will be dovish is fairly well-bruited and well-priced in terms of markets right now.
Okay, so the FOMC will be dovish, but what's your view on emerging markets in general, Guy? Because, you know, foreign investors have sold, what, $6 billion worth of stocks globally since the month of August, ever since the Chinese volatility began. Is there anything to suggest that this selling pressure could abate in the near term?
Well, I think in the very near term, yes, because the markets are very oversold. So we could see some profit taking, and the loss, say, not so much yesterday, but the end of last week, the back end of last week, was somewhat happier in terms of the market performance. Looking sort of more broadly forward over the rest of the year, I think there's still a lot of challenges in terms of emerging markets. First of all, the situation in China is very uncertain. Secondly, the situation in terms of commodity prices is very uncertain. Thirdly, I think that markets are still not fully pricing in the possibility of corporate defaults, particularly in terms of emerging markets, which in our view is going to be very much a theme over the course of this year. So I'm afraid in terms of a more sustainable rally for the market, we still need to wait to get to lower levels and see some of the problems that we're facing in terms of emerging markets cleared up before broadly emerging markets start to have a more sustainable rally.
Okay, Guy, we'll leave it at that. Thanks so much for joining in. By the way, some positive earnings are coming through from